Hello and welcome once again to the Smart Money, Dumb Money Show. I am your host as usual, Keith Richards. I am President and Chief Portfolio Manager of Value Trend Wealth Management, and of course, I'm a technical analyst. And today we are going to talk about the technical breakout on gold. Everybody must have noticed it. Gold broke out from a lid it's been stuck in for at least 5 years. You can see that on the chart in a minute, but what I want to talk about is this breakout sustainable? Should we buy the bullion or should we buy the producers? And are there any danger signals or bullish signals suggesting that we become aggressive or cautious around this trade? So to start with, a breakout is a breakout. We went through about 2,100 and change. That's good news. It's an all-time high. So when we're looking at a breakout, we then want to check to see if the breakout is causing the market that we're concerned with to be overbought. So below the chart, I'm going to show you three indicators. You're probably familiar with all three. One is RSI, Relative Strength Index. It's a momentum indicator, kind of a mid-range look at price momentum. And then we've got MACD, which is the difference between moving averages. So it's a different construction than RSI, which is kind of comparing itself to, say, a 14-day ago look-back period. In price movement, our MACD is more comparing the distance between a very short and a very mid-range, let's call it, moving average. And the more they squeeze together, that can be either squeezing from the shorter term average moving up or shorter term moving average moving down. In either case, it tends to show us which way price momentum is moving from a trend perspective. Then the third thing we're going to look at is MFI, and that's just money flow, which is typically advanced decline type of stuff with a momentum indicator applied to it, and that becomes the MFI indicator. And I find that indicator extremely good at picking overbought, oversold signals on a mid to long-term basis. So let's get started. Let's talk about the first indicator, which is the RSI. It's not overbought, although it's getting there, but you'd expect after a rise like this, it's going to get up there. Now, what's interesting is, if I just bring your attention back to the price chart, is that if you look at 2020, during the COVID crisis, gold spiked. Everybody was afraid that the dollar would get crushed and all this different thing. So gold went up, and it went up parabolically. You can even see that I've noted that on the chart. Whenever something goes up, basically like a rocket ship, without any peaks and troughs and pauses along the way, we call that parabolic. And those kind of movements are almost always reversed. Almost always. Parabolic moves never last for long. So that's what happened after the rush into early 2020. Gold fell. We saw another rise in 2022. Same thing. If you look at the chart, it was pretty parabolic. And once again, gold hit its resistance point and then fell. All right. So this is what I want you to keep in mind, that when we're looking at the current rally and the breakout on gold, you will notice that it wasn't a parabolic break. Like the market really started rallying in a reasonable way from the beginning of 2023. And here we are, March 6th of 24. And we're seeing a breakout. Well, it's been a nice, gentle trend, you might say, on the way to this breakout. So this is good news for breakout fans like me, and I like breakouts. So that, so far so good. RSI as well, like we were just talking about, is not overbought. Let's take a look at the other two indicators. Remember, MACD is a little bit longer term looking because it is using moving averages and just the distances between them to determine price momentum. And you can see it's not overbought, and neither is money flow momentum. So remember, money flow is a concept of looking at how much money is either flowing into or out of that particular commodity or stock. All right. So these indicators are not showing an overbought, irrationally exuberant situation as they were in the previous two parabolic moves, like I was just showing you. But I do want you to notice that those two indicators, that is MACD and MFI, are diverging negatively. You'll notice my little trend lines on those two indicators that are definitely showing us that they're moving down. Okay, so that's a danger signal. Often, and particularly when we see MACD diverging, it's not good news. So I like the breakout. I like the fact that they're not overly overbought as far as the indicators go. I don't like the divergence. So my way of doing things is we own a little bit of gold, but we're really stepping in gently. And I want to now talk about the producers, because we've mainly stepped into producers, but we're just doing first legs. If you've taken my online trading course, and I recommend you do, I talk about how to leg into a stock. You don't just take all your money and dump it into a stock or position. You leg in, and I have a strategy that I explain in my online trading course. Please take the course if you haven't. It's probably the most important thing you can do as a trader. Honestly, I did it for you guys, for retail investors, and I priced it pretty cheap to allow you guys to get in and understand how professionals like myself trade for a managed account. So you're getting insight on what professionals do with that course. So back to what I was going to say about the producers, and that is that I have legged in an individual stock, which has done well, and I've also legged in once with the XGD, the iShares XGD ETF, which is a gold producers ETF. That so far has not done so well. So you can see on the chart, the XGD, which is just the, it's mashed in all of the different producers into one index. And if you know anything about gold, there's such a discrepancy between the different gold producers that it's really hard to call anything an index with these guys. But whatever the case, the producers in general seem to be trading somewhere, and I'm going to pull up my cheat sheet here, it's between 15 and 23. It's about 17 right now. That's nowhere near the same chart as the Bullion chart, is it? They're miles apart, and the reason is because there's good producers and bad producers, whereas gold is gold. So gold is broken out through its old lid. XGD isn't even near its old lid. But the good news is, if gold continues to stay above that breakout point, and I give it a good chance despite the divergences, because those divergences of indicators that I just pointed out, if gold stays above the breakout point, if gold continues to move up, you're going to see them reverse. So let's just keep an eye, not necessarily rush into the trade. But the producers might be a value way of playing it because they're so low. My thoughts is that if the producers do continue moving in the right direction after that breakout, you'll probably see the XGD move up closer to the top of the trading range. Now, when you think of it, if it's around 17 bucks a share now, and the top of the trading range is around 23, give or take, that's a pretty monster move. So that's not a target, that's not a prediction, and it's not a recommendation, because I don't know if gold is going to carry on with its breakout. But for those of you who like the idea of legging into something, to take small steps a bit at a time per my online trading course, the producers might be something you do a small leg in, dip your toe in the water. So I hope that provides you with some evidence and some insights on how I'm viewing gold right now. And if you have any questions, you can always post them on our blog site or at the bottom of this video. By the way, be sure to like and subscribe to the video. You can do it on YouTube, or if you want to avoid the commercials, you can go right to the Value Trend website and subscribe to our videos, and they'll be emailed to your box without getting the commercials. We don't care either way, but like and subscribe, or subscribe on our website to the videos, and you'll get insights like this that are not reported on the blog. Thanks for watching. Have a great day.